Once you take a few minutes to review your bill and you have confirmed that all of your financial aid has applied and you still have an out-of-pocket balance due, you're not alone. We're going to discuss different options you have for covering your out-of-pocket costs. We call it the 3Ps. So the 3Ps are the payment plan, the Parent Plus loan, and a private loan. So the payment plan is as basic as it sounds. Whatever amount is not covered by the student's aid or loans that they accept is going to be divided into 5 payments. You make your first installment when you enroll in the plan, and then the remaining 4 payments are typically due on the first of each month after. There is a one-time fee for enrolling in the plan each semester. This is not always a feasible option for all families, so some families also look at other options such as a Parent Plus loan or private loan. Some families do a little bit of private loan or Parent Plus loan and a little bit of payment plan. It's really a personal decision of what makes most sense for you and your family, but we're actually going to go in and dive down to what the difference is between a Parent Plus loan and a private loan so you can figure out early in advance what types of loans you want to start researching. So we're going to talk about the differences between the Parent Plus loan and the private loan. So the Parent Plus loan is a loan that you are borrowing from the Department of Education. It's a credit-based loan, just like the private loan. But the main difference between the private loan and Parent Plus is that the Parent Plus loan requires the parent to be the borrower. This loan is not in the student's name. They will not get a bill for it. A private loan usually has the student on there as the primary borrower, and a parent or really any other creditworthy adult could co-sign. Typically, these loans do have options to defer the payments while the student is in school. This can vary based on your lender if you go with a private loan. So just check as you're doing your research and seeing what your options are in regards to payments while the student is still in school. One difference is that the Parent Plus loan does have possible options for loan forgiveness due to permanent disability of the parent or if anything were to happen to the student. That's not always the case with private loans, but there are different lenders out there. So just check as you're doing your research what those types of flexibility for payments and forgiveness that may be available. The Parent Plus loan also has a little bit more of a quicker application process. Typically, you can complete the application about 10-15 minutes, and then if approved, the loan comes to the school and can be applied onto the account in as little as 1 or 2 business days, depending on the timing of when that comes in. The private loans, again, you're working with any lender that's out there, so it does depend based on which company you go with. But a lot of times, once it's approved, it does take at least a couple of weeks before that funding will show up on your account. If you're doing this well in advance, there's no problem with waiting. There's no rush, but just something to consider if you're in a time crunch. One last thing is that if a parent is denied a Parent Plus loan, there could be additional funding available to the student. If you recall earlier, we talked about that $5,500 that is offered to most incoming first-year students. If a parent applies for a Plus loan and is denied the loan, the student would then be offered $9,500 in student loans instead. So that's an increase of $4,000 per year for the student that the student could consider accepting. And the last little tip is how to apply for these loans. So for the Parent Plus loan, you can apply online at www.studentaid.gov. Please make sure if you're doing a Parent Plus loan that the parent is signing in with their Federal Student Aid ID or FAFSA login. We do get cases a lot of times where the student logs in or their information is saved and you can't borrow a loan for yourself. Sorry, students, your parent has to do it. So make sure you check who's logging in. And then for private loans, there's a search tool on our website. The website for that is elmselect.com, and that is a tool that allows you to search and compare different loans. You're welcome to use any lender you choose. And just to reiterate, the Parent Plus loan and private loan is really a personal decision. It comes down to what works best for you and your family. If you have any questions, let us know. But there's a lot of information out there, and now is a great time to start considering what works best for you. So one last quick summary of the difference between Parent Plus loan and private loan. The Parent Plus loan may be right for you if you're willing to be the only borrower on the loan, if you are the biological or adoptive parent of the student, if you need the funding sooner rather than later, or if you have a diverse credit history. A private loan may be right for you if you would like the student to be the borrower on the loan as well, if someone other than the parent wishes to co-sign on the loan, and if you're not in a rush to have the loan processed. These are all things to consider. If you have questions, please reach out. We're happy to help you. So if you decide that borrowing additional funding is right for your family, here's just a couple of tips. We really recommend that you borrow for the whole year. When you request a loan, by default, we typically divide the amount that you borrow in half. So half goes towards fall, the second half for spring. We get a lot of questions where, a parent might borrow $1,000, let's say, and they anticipated it to all go towards the fall semester, but they'll notice that they only got $500. That's because a lot of times our system will split the loan in anticipation that you're going to borrow for the whole year. It's also better to borrow for the whole year because it's less credit checks and it's only one application a year. You're not going to have to go back in around the holidays when things are really busy in December and have to apply and worry about the spring bill. So we always say if you can, please borrow for the whole year now. The second half won't pay until the spring semester starts. So it's not like it's paying early and you're accruing extra interest. So it really is to your benefit to borrow for the whole year. In terms of getting the final numbers, as I mentioned earlier in the presentation, you don't really get your final fall bill until around July, but we don't want you to wait until you have your bill in hand to apply for these loans. Our office gets really busy over the summer, so our trick is going to be to overestimate your bill, meaning take all the information we provided to you and come up with how much funding you think you need. If you overestimate, you're able to get back what's called a refund, which you can use to pay other school expenses, those books and supplies we talked about, or if you don't want extra funds, all you have to do is contact us and we can easily decrease the loan to the amount that you're comfortable with. But if you underestimate and you come up short, in most cases, you're going to have to reapply for the loan, which means another application and another credit check, which causes delays. So it's definitely better to apply early. Most loans are available by June, so you can start applying actively during June. And again, that's before you can expect to receive your bill. So when you're doing your math, just estimate a little bit higher and you should be all set. If you ever have any questions about financial aid, please reach out to us. We're here to help you. We just really hope this was informative and helpful for you to learn how to read your college financing plan and understand how to personalize it and tailor it for what costs you expect for school.